Okay, so there's been some news. I don't know if you like saw this headline, but I feel like a ton of people in like tech Twitter were like talking about this. It was also going around on LinkedIn, but apparently this founder got charged with fraud after his AI shopping app was found to be powered by humans in the Philippines. I'm like this direct quote. I'm just like reading what TechCrunch said. And he had raised like $50 million from Forerunner, Cotu, another fund called Renegade Partners. The app is called Nate, so it's like Nate AI. It's some kind of shopping app. Had you heard of this company before this article went out?
I had not actually. Had you?
Yeah. No, I had never heard of this thing before. It shows how up with. I'm also trying to find it now, and all I can find is the Department of Justice case. So apparently, it must be a dead company now because I literally can't find them.
But
But yeah,
yeah, no, I
it
think,
literally says a tech CEO charged an artificial intelligence investment fraud scheme on the government website.
man, that's not a good sign when the first thing you see is that. I think if you go to nate.tech, it looks like it's still up, and I think it's the same thing, but I'm not an expert on this. I also find
Share
it
shop.
interesting that TechCrunch classified this company as a fintech company in the headline. I would
Yeah,
have written e-commerce company charged with fraud, but
definitely. Yeah, actually, that is interesting. I'm trying. It said because it says e-commerce. Yeah, it literally says e-commerce thanks to AI. So I'm wondering why they were thinking financial services. Maybe they were making money on like payments or something like that. That's like my only guess.
yeah. But
Yeah.
every e-commerce company has to deal with payments of some sort, right? So
Yes. Yeah.
yeah, it's a bit strange, but it's fintech news.
Fintech news. I feel like apparently, well, but I mean, the thing is though, like I think the reason why a lot of us like clicked on that headline, at least like if you're in the space, is there's so many companies in accounting, tax, technology that would if you were truly going to jail because you were lying about your using people overseas, like honestly, there's some like very large companies that should just like should like someone's going to
Yeah.
jail. Like my biggest competitor, it's a company whose logo is in orange. I won't say who, but if you know anything about sales tax compliance, you can probably guess. Like they definitely no shade, but they definitely have a lot of humans overseas doing things that I think a lot of their customers probably assume is software. And so I think the real difference here though is that this company, this headline is honestly clickbait because they didn't go to jail because they were doing that and their customers had no idea. He's going to jail potentially because his investors, he just like told his investors, oh no, we automated all of this stuff. And it actually wasn't automated. So I guess maybe the takeaway is that if you're raising a lot of money saying that you've automated, like, I don't know, like you've automated income tax filings and like tax season is going to be a breeze for all humans because you're going to kill TurboTax with this like way cheaper thing. And it's actually just people in the Philippines,
Yeah.
you might go to jail.
Yeah, no, I completely agree with your take because I think you look at, Amazon Go, right? The Amazon Go stores, I don't know how many of them are still operating, but, they had all these cameras. They said, oh, we're going to automate your checkout, and it ended up just being, folks in lower cost of living areas who are doing all the stuff in the back end. And yeah, I think it also is a degree to which, you do this, right? Like you only get in trouble when you get caught, right? When you're out of
Totally.
money, that's when you get in trouble, right? But we've seen, one of the richest person in the world fake a self-driving car demo, right? He said, the
Yeah. Yeah.
person is in the car only for legal reasons, but the route had been totally mapped out. It was a manual thing that they had done for that. So there's degrees here, and I think the trouble is just that they ran out of money, they raised all this money, and then the lying obviously is not
Yeah,
acceptable.
yeah. I do think in the tech ecosystem, there's probably a lot of companies that have. I just from what I hear from investors, there's a lot of frauds that don't even get reported. Like there's obviously the big ones like your SBFs and FTX and Theranos, and maybe you would even throw in that like that company that JP Morgan bought where the founder lied about
Hmm.
the user base. Like those are the really public ones.
Yeah,
But I think there's a
Frank.
yeah, Frank. I think there's a lot though where just even if it's just like massaged the sales numbers, I think there's probably a lot more of these in the tech ecosystem especially than what even than we're more broadly aware of.
Yeah, yeah, exactly. And I think the thing is also that investors are still going to invest in these things, right? If you are a founder and you're saying, hey, we're going to do this thing, we're ultimately going to automate it, but we're going to start out by having humans do a lot of the work, and then we're going to train an AI to do the work, right? Investors will buy that.
Yeah,
It's just I
totally.
think it sounds like the Nate founders, just bypassed that step of saying that they were going to use humans, which got them
Which
into trouble.
yeah, which kind of speaking of that, I mean, it kind of brings you back to the bench news because like bench, like most anybody in accounting, I think probably is at least aware of either because you hated bench or because you were aware of bench or like bench is like one of these companies that raised quite a bit of money. I think like hundreds of millions of dollars to be. I think they were trying to automate both bookkeeping and like maybe like tax as well. And they
Hmm.
also at one point were saying they were building like their own QuickBooks general ledger. So it's like one of these like AI early AI bookkeeping things because they were founded like 10 years ago. And Pilot is like another company from that wave, but they had a pretty public failure. And I think one reason is like these types of businesses don't work if you actually can't automate it and you try to scale it, or at least automate it enough.
Yeah, yeah, exactly. Yeah, it's really challenging because, Bench, I talked to somebody who worked on the sales side at
Mm,
Bench, and something I learned from that is just that there was a disconnect between the sales org and, the actual, accounting folks who were doing the bookkeeping, right? And this might not come as a surprise, right? But if you're in the sales org, you're going to be compensated on how many deals you can close, what you can sell, and, there are things you're going to be saying and telling customers about that. And, it's not in your purview to talk about or know much about the operations and the profitability of the business. And I think that was also one thing that hurt them, right? Is that they had incentives on different departments that ultimately just didn't mesh. I mean, it ultimately just comes down to, again, can you run the business profitably?
yeah, I think also too, just if you're since a lot of like software companies or AI companies or however you want to frame that, they raise money from venture capitalists. Venture capitalists generally expect the number to never not go up. And versus if you've spent time with people that are running accounting firms, tax firms, like there's literally a point where they will stop selling new business. Like I'm friends with this accountant here. He's based in New York City. His name's Alex Rodenberg. He's got a pretty big following on like like tax Twitter, I guess, and LinkedIn. Runs a great firm. There's literally a point in the year where they will stop taking new clients for tax season because they don't think they can service it, and it's very hard to see a venture backed company ever not taking business because they can't service it because it's just like in the venture backed business, it's just the number always has to go up and it needs to scale as fast as possible. Whereas in the service business, you probably haven't raised money or as much money, and you can be a little
Mhm.
more thoughtful and long term oriented about your growth, which I just think is harder when you start raising tons and tons of money.
Yeah, absolutely. I mean, that's another really good point about VC-backed business, right? You just want to make that number go up. Like we've talked to accounting firms on our side, and yeah, a lot of times they'll say, "Hey, we can't take any business this month," or what they'll say is, "If you want to wait a few months before starting, we can offer you a discount in like some of the quieter times of the year." And again, I don't think that's something
Yeah,
that
I've said that too.
a bench would have been
Yeah.
willing to
Oh, and
do.
also there's no room to do that too because they were like part of the reason they grew so fast is they were extremely cheap relative to like a similar amount of like service
Mhm.
work an equivalent accounting firm, and I think that like drives the business growth of those companies. If but then like those economics can quickly end up upside down too because not only are you like trying to grow really fast on that, like you're growing the work super quickly because people are like, oh wow, this is so cheap, but then you just like hit a point. And this didn't even just happen to Bench. Everyone forgets about this company, but there's a company called Scale Factor. Have you heard of this?
I don't think so.
So Scale Factor, I'll link this in the show notes. But I actually hadn't heard of this either. But I remember I have a friend of mine in Austin. This was a company in Austin, Texas. Scale Factor shuts down. I'm trying to find the article. Here we go. Scale Faster raises $100 million, then shuts down abruptly. So this company, Scale Factor, they raised like $100 million, and it was like based in Texas, I think. They shut down like during the pandemic, so it was like mid 2020. So it was like very also too everybody's on the internet then. So at the time, it was very noticeable. But they supposedly had automated like bookkeeping and accounting software, and I think they, unlike some like Bench did a lot of e-commerce and to some degree startups, and whereas I think this company really focused on SMBs, like coffee shops, like small, largely brick and mortar businesses, is my understanding. And there's a good Forbes piece as well that is actually the one that I remember going pretty deep on this. But basically, it was just same thing. Tons of humans overseas. There was no actual AI. Founders told investors, "Oh, this is AI. We're automating everything." The customers believed it was being automated, and then just like, and they were trying to grow really fast, and just it was like the service quality just wasn't actually there. Things weren't actually automated, and so like someone's tax books would be done incorrectly, taxes were done incorrectly, and then like the business just kind of imploded. So this has happened like multiple times before, which begs the question: will this time be different? Because now there's like a ton of companies raising money
Mhm.
to do AI bookkeeping of some kind and accounting, and I'm like, and in many of those companies, I even like I know some of the founders at some of these companies, and like, but there's like probably there must be dozens of companies trying to automate bookkeeping or a task like that with AI right now, and more starting all the time. So Andrew, is it different this time? What do you think?
I mean, you never know. It could be. I think they always say, is it different this time as sort of like a rhetorical question, right? But if you look at the AI developments and especially the pricing, I think on some of these reasoning models, I think there has been a lot of functionality that you wouldn't have been able to do 4 years ago if you were scale factor, or even 1 or 2 years ago if you were bench with AI at a cost effective price that makes it possible. I'm not ruling that out. And in fact, I think there's a variety of different approaches that I've seen companies take to this, right? So on one end, you can start with the small businesses and try to automate most of their accounting, right? Or say 80% of their accounting. And on the other end, what you can do is you can go into a big enterprise, say like a Fortune 500 company or some other public company, and say, I'm going to look at this one process that you do and do a really good job of using AI to automate that. Because at that scale of a 50-person accounting team, automating one process maybe saves you 5 or 10 on headcount, right? And that's very valuable as well. And yeah, I think there are so many people who are going after each of these kinds of problems from both angles, and then from all of these different problems within the enterprise space, that I'd be surprised if none of them succeed, right? I think we've already seen some success with things like three-way matching, right? So when you're trying to match like a bill, a purchase order, and an invoice, you get those at different times from your vendors, and matching them is sometimes pretty annoying because of the timing differences, because of differences in line items that you see on these different forms. And AI seems to be doing a good job of that, because we've seen some
Yep.
companies, I think, that have succeeded there.
Yeah, totally. Actually, speaking of, that's actually a great segue to what I wanted to talk about next. Or actually, I actually almost forgot about talking about this, but literally a company that automates, it's an acquisition. So a company called Glean AI, it was like a Bill.com competitor, much more AI oriented. They got acquired. At least the news was announced they were acquired. And this happened yesterday, actually. And so funnily enough, I know Howard, the founder of this company. We share an investor. So Noma Ventures, shout out, love you, Kate and Rahul. They were one of our first investors. They also invested in Howard's company. So Howard Sir Katzenberg, founder Bill, his literal headline says frustrated with Bill.com. You'll love Glean.ai. It's great. Love the aggression on the marketing. But he was CFO at On Deck, the lender, like back in the day. And so, which was like used to be a big company, took help take that public. And then he was CFO at Better Mortgage, and then started Glean. And I know we actually share a couple customers, and I know the customers that do use their product, like really, really like the product. And so anyway, and so they got acquired by Pipe. And I think Pipe is doing, if I'm not mistaken, they were like a very hot company during COVID. But it's essentially like, I think their first thing was they were doing like some kind of lending against recurring revenue for SaaS companies. And now it looks like they're doing more like, it looks like they've kind of pivoted to doing capital for like merchants of many sizes. And so I think the business has changed a lot from when it first started. But this company like raised a ton of money during like the peak of like 2021.
Mhm.
And so yeah, so I was kind of an acquisition I'd be lying if I didn't see coming. But I think like spend management, bill pay, APAR has gotten super competitive. And so I think like Glean, great product, great founders, probably pretty hard in that space to just compete with like, because like even like I think they do some things that like Ramp and other companies like Bill.com doesn't do, but clearly like Ramp and all of the expense management companies are just like trying to build as much stuff as humanly possible. So it's got to be very difficult to build a standalone, like even if it's the best product in the space, you're just competing with all of these companies with all of these resources. So it probably does make a lot of sense for them to try to partner with somebody else. So shout out to them, big acquisition. Yeah, crazy to see though.
Yeah, I mean, I think you mentioned a lot of things that are, because I think, I've talked to CFOs as well, and they're just like, man, I have so many bills, I have so many vendors for each thing that I want to do. And I think again, there's like two approaches to this, right? Like some startups are saying, hey, we're going to go integrate with all the existing big players, say like the NetSuites, the SAPs, the Tipaltis, right? And customers who are using that. And then I think there's a whole other set of startups that are just starting from the ground up and saying, hey, we are going to build this one comprehensive platform, right, for everything. And I think Ramp has actually done a really good job of that. Ramp does an amazing job of just handling all sorts of
Yeah, totally.
spend.
They
So
they do they do. I think like it's an exceptional product. Like one of my favorite questions to ask a customer is just what are your favorite tools in your stack? It's actually like a really great way to get a pulse on just how people feel about vendors. Like for example, I will say there's like some very big name vendors that like don't have a lot of as much love as you would think relative to their clout. And then there's vendors like Ramp, but like Ramp is the one that consistently every single person I know that uses it just like loves the product. And so yeah, I think it's rare though. I think it's actually rare because companies that try to do as much as Ramp is trying to do, usually the collection of products, like I think Rippling, no disrespect against Rippling, but I don't think their user experience is actually as good. Like I think they built it all and there's advantages to building it all, but I think the it's not necessarily each component piece is not better than the like best in class tool for that product. Whereas Ramp actually to some degree has like probably gotten closer to actually building as like the best in class product or close to it, like one of the best for multiple different SKUs, which is pretty impressive.
Yeah, yeah, absolutely. And I think in the accounting space in particular, there's so many old tools, right? So much old software. And, we know all about this because we have to build the integrations with them. I imagine you guys as well.
Yeah.
And the other thing
Yeah.
about that is when you look at the technology integration, you can probably extrapolate to, gosh, it must be really hard to try to switch off of this tool, right? So I think there are, both strategies that I talked about earlier, building from the ground up, and also just going after customers of existing tools. It's just you're actually targeting pretty different customer segments there if you're building this software.
Yeah, yeah, because if you're going after the tech, like the venture-backed tech companies, they're all probably using a lot of the modern tooling, and so that like changes the set of integrations you're going to have to build. Versus if you're building for people on like a somewhat either partially or fully older stack, like you're going to have to build with NetSuite, with Sage and Tac, with like all of these like other
Mhm.
other products that maybe like Bill.com. And not even saying those older products are bad, but I will say if you're building integrations with them, it is like probably for one of us that is integrating with these older products. I find it to
Yeah.
be one of the more painful, it's just not easy to build integration with NetSuite, for example. Like NetSuite is a very complicated old system. It's been around a long time. There's multiple versions. What has been your like least favorite that you built for so far?
Man, I think so. It actually used to be NetSuite, but since I've gotten more comfortable with NetSuite, I actually understand why NetSuite has so much market share now and why so many people use it. It's so customizable, right? So it's that double-edged sword of, it's
You could do
pretty
anything.
complicated, and that's why you have like a whole industry of NetSuite consultants, like NetSuite certified people, which, I always think that's ridiculous, right? Your software should be intuitive enough to just be able to find what you need to do. But yeah, I think NetSuite's very powerful.
So
Okay. Yeah, they also charge per API call, which is ridiculous. Like they charge you 1.5 cents per API call. And
not from like a revenue share, but just for like having an integration.
yeah, yeah. So every like for us it's 2,500 per year just as a base fee, and then 1.5 cents per API call. And like if you're syncing data, like depending on how much data you're syncing, you guys are probably syncing a lot more than we are. That gets expensive. They do give you a $1,000 per month like credit on the API calls. So for us, at least, we're not hitting any of that limit right now. So we're just paying the like annual subscription fee of 2,500. Imagine if you're a big company, if you're like downloading transactions or like checking transactions every so often, maybe you can negotiate with them. I don't know.
Yeah. You have to pay like a 10 grand a year license or something like that to be able to like
Yeah.
build the integration, and then they charge you like a revenue share. I'm pretty sure like most of the time for like any customers who sign up in their ecosystem. It is but I mean at the same time, and the other advantage to NetSuite, it may be horrible that you need someone to do this insane implementation just to use NetSuite. But on the flip side, that is an advantage for them too, because you've got like literal businesses incentivized for you to use NetSuite because their business is built around you using NetSuite.
Yeah. Yeah. Like there are straight up entire businesses dedicated just to building some sort of like integration with NetSuite. It's not even NetSuite consultant. It's not a service business. It's like software just for people who use NetSuite. And like we've done similar stuff, right? Like we see NetSuite in the market probably having about 30 or 40% share among the customers that we target. And, you know, it's hard to ignore that. And NetSuite's so customizable that okay, like we are sort of forced to onboard onto the platform, and NetSuite's market position is such that they can charge every side of their market, anyone involved to access it. And
Yeah.
it's a good spot to be in, but it kind of sucks if you're a startup and you want to, iterate and build.
Yeah, yeah, literally. On that point, since we're talking about ERPs, you actually texted me this last night. There is a new up and coming ERP player called I'm trying to I think it's DOS. I want to say DOS. Am I looking that
Yeah,
up correctly?
I
DOS
also
dot
didn't take a
com.
close look at this. I just saw the tweet and then, it's from a VC and I figured he was shilling one of his port codes, but
They
You know,
always
there
are.
there are a lot of newer ERPs that are coming onto the market, and I think
Yeah.
this one,
Yes. So let's see. Announcing our $18 million Series A led by Tamaz Tungas at Theory Ventures, including participation from Contrary Capital, General Catalyst, 20 Sales, and I don't know what this logo stands for, but some other VC fund. And they are, how do you speed run 50 years of ERP software is the kind of headline they're leading with here. So this is they're going for the ERP. And if you actually just keep reading in the article, our mission is to unlock the agility of the global supply chain. The ERP incumbents are sleeping giants of the tech sector. SAP is about to celebrate its 53rd anniversary this April. Almost all the other market leaders were founded before I was born. This is so tech, bro. Respectfully, this is like I can see myself writing this. You see, despite being one of the largest software markets, $100 billion plus, and still growing, ERP is a controversial scorecard because between Gartner, McKinsey, and vendors themselves, ERP implementations fail between 55 and 75% of the time, and typical projects last 12 to 18 months. So they're basically hating on what everybody knows. ERP implementations suck. All the companies are old. They're super not modern. And so their positioning is that they kind of talk about how they got here, but I guess like built for the real world. DOS is the enterprise unleashed. I think on it, like, I guess like I'm having the real result is DOS ERP. I think like I don't fully understand, if I'm being honest, their exact differentiation. Besides, it's like clearly
yeah.
more modern. It's designed for humans and LLM agents alike. And ERP has got to be like one of the, like, I say this respectfully because ERP must be so hard to counter position in because it's already like the most complicated product ever. But yeah, I mean, the clearly more modern UI. Clearly, they're trying to build like very AI enabled. They've clearly got some great traction. And I think this year, so here's how they end it. They talk a bunch about like very in the weed stuff, and it looks like they're focusing on supply chain. So I'd imagine like more companies moving physical goods. But they end with like, we're going to ship the world's first E2E. I think that means end to end AI configured ERP. DOS ARP customers will get a Copilot designed for real world jobs. Enterprise customers will leverage DOS ARP as an app platform iPaaS solution and data warehouse. If you could build an iPaaS that I don't hate, good luck. I hate them all, respectfully. I've not found one that I've really loved, but that's ambitious. And then they say we'll be recruiting the world's most world class builders to join Sales Engine product. So I mean, good for these guys. It looks like they put up a ton of traction very quickly, and
Yep.
it's they're trying to do a lot of stuff. Yeah, thoughts, reactions to. I just basically gave the like summary version of their Series A announcement.
Yeah, no, they are doing a lot. And one of the things I actually like about NetSuite that I've come to appreciate over time is that it is essentially just a database. And in the DOS announcement, you mentioned data warehouse, right? And I think a lot of analytics tools and other tools that, the Office of the CFO will use need to integrate with the underlying accounting data. And that's what makes NetSuite very powerful, as complicated as it is. At the end of the day, there are a lot of things you can do in an integration to just pull data from NetSuite and show what you need. So yeah, I think it's interesting. I think the other thing that interests me about new ERP announcements is that I think last year YC had a request for startups that included
Yes, I remember
ERPs.
that.
Yeah, and let me see if I can pull that up.
I don't see. I'm not seeing it, but it's definitely. I definitely have seen. I
Yeah,
know
it's kind of
exactly what
funny
you're talking
because
about.
I think in their previous request for startups, they had it, but maybe they removed it, which is
Yeah.
also, that's a very interesting point in itself.
Yes. Yes, it
But
is. Yeah,
yeah,
because there's like this, it's a big space too. Because if you think about ERP, it's like basically the history. Also, too, I highly recommend anybody that wants to learn more about ERP go read. So he's now the CEO of ServiceNow. I recently read the biography of Bill McDermott, and he was SAP CEO for like 10 years, I think. And so great, interesting book. Bill McDermott. I'll also, there's going to be so many things for our editors to link in the show notes, but please don't hate me. But Winner's Dream, a journey from the corner store to the corner office. He wrote this before he joined ServiceNow, which is also a big SaaS company. But yeah, like so you've got like SAP, one of the oldest companies. You've got SAP and Oracle basically, and then a bunch of different players like that have some other part of the market. Like Microsoft is pretty big with Dynamics. So there's like a lot of other players, but like maybe SAP and Oracle are kind of two of the biggest. And Oracle partially because they eventually Ellison helped incubate and later just bought NetSuite and folded it in. And so NetSuite was kind of like the cloud ERP, the main big cloud ERP. So I feel like NetSuite's like your mid-market ERP for a lot of companies. Like you kind of got like Sage Intacct and a few others that have like different corners of the market. And then if you go big enough, it's like SAP, Oracle, maybe a couple others. And then like I don't know. There's I'm trying to I know I'm missing like a bunch of like different point solutions. And now and then like small is just like QuickBooks, maybe zero. And now you've got like a bunch of people trying to like somehow like I think the thing that I see, and I'm curious what your take is, that between QuickBooks and between NetSuite, there's this big gulf or this big like gulf because realistically, like I don't think most of these companies are actually trying to replace SAP right now. Like good luck, or even maybe some, but like NetSuite theoretically you could try to go after maybe NetSuite and Sage Intacct, but no one's trying to go get Coca-Cola to move the entire business off like SAP or whatever they use. And so realistically, you're going after like maybe divisions of certain companies or just like mid-market companies, or you're trying to get companies that are like growing before they move from QuickBooks to whatever ERP they pick. And so everyone that wants to compete in this space is going after something like that. But it's like so hard because it's so much software to actually build. Building a database is like not easy, to your point. I mean, there's entire companies just dedicated to like databases, data warehouses. Like the data space on its own is just like a multi-billion-dollar category of software. So are you, so maybe like let me hit you with this because I'm curious your opinion. Long short, are you long short ERP startups? We'll start with the category at large. AI does have the editing now.
Yes. Okay. Yeah. So I think there are certain segments that some ERPs will be able to capture. I think I have heard the same thing from controllers about, something lacking between QuickBooks and NetSuite. I've also heard, the founder of an accounting firm say, we don't need anything in between, right? We're a QuickBooks and NetSuite only shop. I think that's really interesting. I do think like one super basic thing that QuickBooks could do that would solve a lot of the concerns is that if they just had some sort of multi-entity support rather than having to make a new instance for every subsidiary, and then maybe some consolidation features with that, that would solve a lot of the problems. And then I think as it relates to NetSuite, you know, there have been times that I've talked to controllers who've said, yeah, I love NetSuite. NetSuite's the best in class. And I've also talked to controllers who have changed jobs and are no longer using NetSuite. And they're like, yeah, I kind of wish I was still on NetSuite. With the software that I'm currently using, I just can't do all these things. And so I need to find an external vendor to provide me this functionality. And so it's interesting to see. I think there is a lot of, kind of polarization there, but NetSuite is very powerful.
Yeah. So you long short. Would you say you're long? You're short. The startups going after the space.
I think it's possible that one or two of these will succeed and get really, really big. I don't think ERP is a winner take all market. And I think especially because we're seeing some new startups focused on ERP for a particular customer segment, those may be extremely powerful. Right? So if you're building an ERP just for SaaS companies, right? SaaS companies have their own set of requirements. They tend to be, I would say, a little more straightforward than, a manufacturing company or a retail company. And if you're focused just on that and you're focused on building, automations and a best-in-class experience for that, I think there's a way you can win there. I think if you're trying to build the new NetSuite or the Oracles or the SAPs, it's going to be a challenging battle. And
Yeah,
ultimately they can get there, but that's not where they want to start.
totally. Yeah. Shout out to, I agree. I think Gorilla is an example of someone that's done really well going after the SaaS companies. I think there's a lot of opportunity in that space. And then
Absolutely.
I think going after some of these other like longer tail industries with like some specific niche pain point is interesting. One company to not forget in ERP, and then we can switch gears is just Odoo. Like people forget, like I don't know where this company came from, but we're gonna have to eventually build an integration here. And this company is like they're not even, I know they raised a big round recently, so they got more press than they've had in a while, but like no one really has heard of them in Silicon Valley at least. And they're like quietly have built this powerhouse in both ERP and CRM. Like they've got like this, and it's like an open source product. And so I honestly like I'm curious, have you seen them around in the market at all?
Yeah, we actually weren't aware of them either several months ago. And then we had an inbound from a customer who said they were on Odoo and they went on our website and they didn't see Odoo on the website. And got on a call with them, and that's when we learned about Odoo. We built the integration, and building the integration was fairly straightforward for us, and we actually like Odoo as a system. And yeah, I'm not sure why they're flying under the radar so much, or if that was intentional. But it's a great system. I have really only explored the accounting part of it, but it sounds like they're doing more as well. And I think pricing wise, they're very reasonable. And I think I also saw that they're open source. So, if you were so inclined, I suppose you could run your own instance of Odoo on your own server.
Yeah. I would love to learn more one of these days about how the open source thing actually works, because this is not a category where you typically see anything open source.
Exact. Yeah.
But yeah, it's very cheap, but surprisingly big company. Like I think they're over $1 billion in revenue, I want to say. So which is like kind of crazy to think about. Like literally a company that those of us that eat, sleep, breathe this space, half of us haven't heard of, and it's doing over $1 billion in revenue. That's nuts.
Yeah, yeah. And did they raise a round? They're still a private
Yeah,
company, but
they did, but they raised from Sequoia did a huge growth round. And then I was
interesting.
bored one night and I just was listening to, okay, I wasn't bored, but I was like brain dead. I just like put a podcast in the background. Or no, it was on YouTube, and I found one of the Odoo founder, and I'd seen their round. It says like, oh, I would love to learn more about this company. And apparently they did raise money before that, but he bootstrapped it for like on services for several years. I think they're based in Europe. And then they eventually started. They kind of used that to get early revenue, eventually raised like a very dilutive, very small round of funding from European VCs. And then I think they did like one or two growth rounds like years and years later, but they raised a lot less money than most comparable US venture backed companies would.
Yeah, that's an amazing story. It's like totally non-traditional Silicon Valley BC story, and that's
Huge
that's really
business too.
awesome. Yeah, I'm seeing the story now from November when they announced a $500
Yeah,
million round.
huge round.
Good for
Yeah.
them.
Good for them. We'll also link that in the show notes. Okay, so I think we got time for like one more thing. Should we talk about? I'm looking for my agenda doc here because we wrote down notes. Okay, should we talk about how people are using accountants, finance teams? How are people using AI in their day-to-day work? I feel like there's a lot of
Yeah,
companies
let's
trying
do
to
it. I
build.
also wanted to come back to
Oh,
the
go ahead.
question
Go
that
ahead.
you asked me earlier, which
Yeah,
was,
yeah.
am I long short these new ERP
Okay.
startups? What's your
Yes, yeah,
take on
yes.
that?
Man, I'm long that there will be reinvention in the category. I think like you, it's so big that it's so big. And I do talk to a lot of like, we're going to be building an integration with some of these newer players in the near future. And it's just you see people really clinging on to QuickBooks. And you see people on NetSuite not be happy. You see all the failed implementations. And I really think in accounting and finance software that if you find a way not only to build a better product, we're kind of assuming here that these companies can build a better product, but that if you can actually be so much better on your implementation, I think a lot of companies will pay for that, because implementation is kind of your moment in time to make a customer successful and create a customer that loves you in accounting, finance, like tax type software. Because it is so like you can either do the job or you can't. But like a lot of the potential for pain is in that setup. A lot of the scare is in that setup. A lot of the reason not to trust a new vendor is in that implementation. And I think if you're really, really good at that, and I think some of these up and coming companies, like I think Rillet has a reputation, for example, of being really good at implementation. If you try to be best in class at that, I do think you really can win. And that is also one of the weaknesses of a NetSuite. And so I think there's just like in that land, there's a lot of opportunity. And it is so big that even if you carve out, like if there's like $10 billion in spend that's going to go to NetSuite in the next decade, and half of that goes to up and comers instead because of like all this competition, that's believable to me. And so I think, and then generally it does kind of seem like eventually somebody should figure out how to just disrupt like SAP and Oracle and some of these even older companies. But that one, if you're truly trying to like compete with like the really, really huge players and really huge enterprise, I think that feels like I don't know if I believe in that. So like nuanced answer, I'm long to a degree. I'm long that at least a couple people will build a really big business around a more horizontal ERP. And then I think vertical ERP makes a lot of sense to me. Like there'll probably be a few smaller, like big in their industry winners there. And then I actually think the biggest question is not like, will somebody like win big, but like, will somebody be like the next SAP in 50 years big, or will like eventually like one of these companies just sell for $10 billion to SAP? Is like that like the end game for everybody? Is it
Yeah,
nobody actually wins?
exactly.
It's just like Larry Ellison will swoop up and buy whoever the next NetSuite is. Like Larry Ellison will just buy it, and maybe we're like back in the same place in 10 years. Like I actually think that like might be the bigger question.
Yeah, yeah. It'll still be a step up, right? Because even after they
Yeah,
acquire it,
yeah,
presumably the same functionalities will be there. The pace of innovation will just be
it'll slow.
slower.
It'll slow. Prices will go up, and then in 10 years, like the next generation, we'll go try to do this all over again.
Exactly. Yeah. And actually, I think, this is a crazy thought that I've had, but, with AI, this may be a good segue into AI. But with AI and, Manus launching recently, if AI can just operate our systems in the future, what if all these super old systems are just good enough and we can get AI to just do it. And we don't need to reprogram all of these interfaces and anything else, you know?
Yeah. Yeah. I actually think AI for both programming structure for like being, I think like rip and replaces are one thing that will get easier. Like switching between systems is going to get easier. We're not there yet. Like I think the thing is, to your point, you really have to kind of like be looking far ahead in the future because I actually think the models are already powerful enough between like coding, dealing with lots of different unstructured data. Like you're like working with like some of these like really really old systems. Like agents are not, I think the models are there for agents or getting close to there for agents, but the agents themselves are not there yet. But like agents are going to get in that direction to where they can go do a lot of this like super laborious work. But I think we have a lot left to do, both in terms of models getting better, but also just making like figuring out how to productize them to actually, and integrations and data are everything here. And so like I think like building the actual products and productizing this, like we're gonna spend like at least a decade seeing that like slowly play out. But if you believe that's going to continue to happen, then it does feel like maybe eventually some of these systems of record get a lot less, maybe not valuable, but maybe they still like slowly, maybe they're like there for a long time. But if like you're eventually just kind of like a dumb database and like all of the core workflow is moved elsewhere, then increasingly it maybe gets easier to either like the value of the database goes down or you just can switch entirely. I don't know.
Yeah.
Yeah.
And I think going back to your point about implementation being the point at which, you can make your customer happy, I think we should also not lose sight that, even though we're selling software, there's a service component to it as well. And AI is not going to replace that. I don't think. I don't think anybody's going to want to talk to an AI for some of
Totally.
these things. Yeah. And, I think that the relationship and the service aspect of the business is also going to matter a lot. So it's going
Yeah.
to be
And to
hard to rip
that,
out some of those.
yeah, I think that's actually probably the bigger thing. It's less to like even if like technically it would be easy to do that, I don't think if the only way is like theoretically that you can automate away their stuff, like you will need the human component, and so any up and coming player is going to have to figure out like that human component just as much as the incumbents do. Like we have to go get distribution, we have to build like relationships, we have to build like service quality because like someday for my business, like where we're competing with Avalara, eventually we want to compete with even companies like Vertex and Thomson Reuters, like I'm gonna have to go like make all of these old school accounting firms and implementation companies and older school CFOs like that. I'm gonna have to build trust with them, and a lot of that is like going to come from our own service, but it's also going to come from building relationships with existing service providers. I don't think even if AI like eats away at a lot of the work being done and the way we can stitch systems together and makes the products better, the people are going to ultimately buy from people. I don't think that changes.
Yeah. Yeah. And I think even if, people like us are just using AI on our side to build a better product or build a product faster, that also counts, right? I think it's not just, AI in the product itself, right? It's if I'm using AI to help me write code and making me, twice as productive, like that is an insane productivity improvement that allows my startup to satisfy my customers more effectively. So,
I mean, and so and maybe I guess we can come to the question I was going to ask maybe next time, but like maybe to end it, the actual natural implication I think of this that is interesting is that, or I'll make this a question, not a statement. Do you think that software gets cheaper, like over time? Do you think like prices go down? Like what happens there if like theoretically these products get easier to build, there's more competition, you can do more.
yeah. I tend to believe that. As someone who generally subscribes to, economists' view of, markets and efficiency and rationality, um, I think it will. Whether that's driven by startup founders just offering similar products at lower prices, or people internally at companies having the ability to build something that they need at a much lower cost. I think there are a variety of forces that will ultimately drive down prices. I think if you look at the industries where prices have gone down over time, right, a lot of it, I would say, has been hardware and hardware related things, right? I think the great example of this is, maybe 10, 15 years ago at every AWS conference, they would announce new price cuts on their EC2 instances. And, it's because they were very customer focused, but also because, competition was coming, the hardware was getting cheaper. And if the same thing happens to software, then I think definitely software prices will come down. On the flip side, though, I think if you're a company and you have existing customers and someone comes in and says, hey, we'll cut the cost by 50% or what have you, um, and you can always focus on adding more value, right? I think price is not the only dimension here. And I think it's ultimately for every customer, it's like this
Totally.
price value trade-off, right? Value ultimately is like how much are you delivering for them against the price that you're paying. And I think,
Yeah, Alex
yeah.
Karp
What's your
from
take?
Palantir actually has a really interesting quote on this that I'm not going to remember exactly. off the top of my head, but it's essentially like he likes to ask customers, how much do you think you're like paying, like how much value do you think you're getting relative to what you're paying? And ideally, and I think the best companies, there's kind of like value exploitation, and there's value, there's like extraction, not exploitation, we'll call it extraction on one side, and then there's like giving value on the other. So like a free product, for example, theoretically, if it's a good product and you use it and you like it and you get value from it, well, there's you're getting so much value you don't even pay anything for this. And then on the other side, you're like getting another product where like you get value from it, but gosh, you are like getting like a lot is being taken relative to the value that you get. And then there's shades in the middle, and I guess like there's probably some like ideal frontier of like where that's like most ideal from an economist perspective. But I think a lot of the best, I think what you typically see, especially in any, I think this is especially true in like finance accounting software because it's in tax, because it's driven by so many old companies that have been around a long time. The bigger you get, the tendency is to exploit more and more and more value and to extract more value from your customers, from your ecosystem. So one of my biggest competitors, their playbook, now that they're owned by private equity, is just like raise prices, cross sell products, like keep raising prices every single year, and that's like like the same thing you got last year, but not only is it more expensive, you get less service unless you want to pay even more for like additional service. And so, and you do tend to, and there's just like this natural law of like every enterprise software company wants to raise prices by a certain percent every year. And so, taking a more modern company, I think Ramp is a good example of this. Not to keep showing them, but Ramp, they do this interesting thing where they gave away value for a long time. Where yeah, they make money on interchange, but relative to a lot of their competition, like Coupa, Expensify, even I think Airbase, I think, and several other companies in this market, they gave away the card for free, which everybody else was doing, but they were not charging for the software for a very long time, which they changed recently. But I think they're a company where if you pinged their user base, I think a lot of their users would say, I get so much more value from Ramp than what I pay for. And so when Ramp did start introducing some kind of software as a service, like upsell, I think a lot of companies did not like view that negatively because there's like I'm getting a ton of value relative to what I pay for. Versus I think there's a lot of incumbents that are continuing to extract more, and I think those companies especially, you're probably not going to move for just like 10% cheaper, but the more commoditized something in is, if supply increases, it does feel likely that prices come down at some point. And then just if you're extracting a lot and there's increased competition, it does feel like, I don't know, this is like a long-winding philosophical answer to your question, but I think there's like something there along the like how much are you extracting in value
Yeah.
relative to what you're giving. And if you're not, and ideally in software, because products and technology are always getting better, you should always be pouring more into additional value. And if you're not, you're very vulnerable to somebody that is, not just because of price, but because they're probably building more valuable stuff while you're sitting there just charging more for the same thing that they've been using for years.
Yeah, yeah, exactly. And I think speaking more at the 10,000-foot view, SaaS in general, I think is very susceptible to this, right? The exploitation,
So
I think that we've seen
totally.
in a lot of SaaS. And the reason that VCs love investing in SaaS, right? It's the 90% margins, the sticky contracts, high switching costs. And I think that is probably going to change, right? At a minimum, that is going to change. I think your example of Ramp is amazing. I think these companies that are, offering tons of value and not trying to extract every last penny. Those are going to be the ones that people aren't really even going to try to replace, right? Like in the physical world, the way I think about this is Costco, right? Like I am basically a Costco cultist, and I think you are as well,
I
given what
admire
I know.
Costco. Yeah. And shout out to Brandon, who, if you've not met, you guys should definitely meet someday. But Brandon, the CEO of meow.com, which is like a banking, and more recently they do cards and they do some billing stuff now. So they kind of compete with like the Mercuries, the Brexes, and to some degree the Ramps of the world. But their whole thing is they just like give way more economics to their customers than anybody else. So you guys should be, but keep going. Costco. We love Costco.
Yeah, no, exactly. Give way more economics than somebody else, right? I think I read something a few months ago about Costco's clothing section and how they generally try to cap their margin on the clothes that they sell at 15%. Clothes are super expensive these days, right? Like a pair of new pants runs you like at least $100 for a lot of these brands. And you go to Costco, you can find something roughly similar for like $20. And I guess I just outed myself as like enjoying the Costco clothing section. But when you look at just my attitude towards Costco, right? Like anything that they do, I would basically trust them, right? They would have to do a lot to break my trust. And I think they've done a lot to earn that. And I think, part of it has to do with price, part of it has to do with branding. So, and just kind of consistent performance over
Yeah.
their their company's existence.
Totally. So well said. I think you just, if you're in software today, as either you're at a company that's been around for a bit, or you're building something on the newer side like you and I are, I think the only thing you can really anchor to, and honestly, if I'm like a controller or accountant, finance person, whatever, like just like looking at my vendors, I would think about it this way: is the only real moat and the only thing you should continue paying for is just like the company that's serving you, or if you're serving a customer, you should be relentlessly focused on like how can I do as much as possible and give as much value as possible. And yeah, I want to like make money from the value I deliver, but I like my customer should always feel like, wow, like just the amount of value that I'm constantly getting delivered from this company, and it's just like it's always going up. Should be like tremendous, and you should never stop that. Like you should be trying to ship as much as possible, and like that's kind of, if you just keep doing that, like Costco, to your point, has like done that for decades, and I think the best companies just do that and continue doing that over and over and over again. And so every single year, like they're not static. They're continue. It's like the value compounds. And I think the flaw of software companies is that like normally once you get to a certain point of growth, a lot of companies like the value stops compounding or like it slows considerably. That's why you tend to see like maybe it's one of our angel investors, Siki Chen, tweeted this. He runs an FP&A company called Runway.com, and he tweeted this that I thought it was so true. And I think some of it's true because so what he said is that every 10 years you can kind of just pick an established market, build a new version of the exact same thing just because people get tired of the old thing and all want to try the new thing. And I do think that's true. There, like this is just like a human nature thing. But I also think some of the reason for that is that I think in his market, if Anaplan was amazing, or like what I like pick your FP&A incumbent, I think that maybe like I don't know, maybe people probably wouldn't be trying to go compete and build like a modern FP&A thing. So it's like a little bit of both. Like technology changes, companies slow down, and they stop delivering value. And so if you want to somehow beat that curve, you've just got to like it's like always day one. You're always like you've always got to be shipping the new piece of value, or you're potentially vulnerable.
Yeah, I mean, that's perfectly said. And given everything that you said, I'm really excited to see you guys grow because, if these are your beliefs, these are what you're executing on, then, TaxWire is going to do great.
We got a lot of work to do. That's how I feel. I've literally because I believe this. So like that's the thing is like every single day I just feel like we are not like we. I'm like almost embarrassed on like the amount of things that I know I want to do that we need to do relative to what we have to do is just like God, like we just have to like we just need to work harder. But also I feel that way for you in CloseCore because I know you guys I think obsessive on a level about just we love accountants. Actually, like we actually say that here. It's like we love our customers. It's like you
Mhm.
like love your customers and you're trying to serve them. And we're gonna like probably cut half of this out because this is not a shell for our companies.
Yeah, yeah,
Like if you love your customer though, it should be a bull sign. I'm like we're gonna like bullish sign because we're gonna just deliver as much value as we can for them because it's more fun doing business if you actually like your customer and you get a lot of joy from like we built this thing and it like made someone's life like
yeah.
10% better than it from a workflow perspective than it was yesterday. That's fun.
Yeah, no, those are my favorite moments, of the company when we actually get on a call with somebody after, a month or two of hard work and finally demo something and then having them see it and get it and be like, yeah, this is going to be useful for us. That's why we do this. So,
Yeah. Yeah. We're just trying to build useful tools for people. That's kind of all. That's kind of all it is.
yeah,
Well,
exactly.
boom. This is great. This is a new thing we're testing out, so we'll get some feedback and see how this goes. But this was nothing else. I had fun. This was a good time.